Hey, what's going on, investing family? I'm Stock Market Jay, and we talking about fractional reserve banking today. All right, guys. This is one of the most widely misunderstood, or maybe even unknown topics when it comes to the financial system, the monetary system that we have. And here's the thing: this is what is essentially devaluing your dollar. Fractional reserve banking is basically it's a banking model where banks only need to keep a portion, i.e., a fraction of their customers' deposits on hand, and they can use the rest for loans and investment. This system allows banks to expand the economy by freeing up capital for lending. So essentially, with fractional reserve banking, it gives the banks the leverage to leverage your money, right? They only need to keep a portion of your money on hand in the term of by way of deposits. Keep your deposit, a portion of your deposits on hand, and then they use the rest to buy government securities, to buy bonds, to buy real estate, to make investments and things of that nature, to lend out to other people as well. And this is in fact inflationary by nature, right? Because essentially you're taking money and using it to create more money when you are creating debt, when you're giving out those loans, when you're giving out those credit cards, and where you're lending money, like you're creating debt, and you're creating money out of thin air, right? And then the other money that they use it for, like I said, they're buying government securities, bonds, treasury bills, notes. They might be buying real estate and things like that. They're tying up the money to make a return on it. And it's nothing wrong with that, but here's the thing: it puts them at risk for bank runs. A bank run is just when people come take the money out of the banks. They let's say it's a time in the economy where people are uncertain on the financial industry's ability to protect their dollar, which they don't have to be because of the FDIC, the Federal Deposit Insurance Corporation. They protect your dollar. They insure you against loss up to $250,000. Um, but here's the thing, though: this is what kind of incites those bank runs, because if people start pulling out the money that they are fearful of for whatever reason in the banking system, the money's not there, right? The money's not there. And then if people start pulling out the money, now they have to sell off assets, and guess what? Those assets become devalued. So now it's less money that they have to work with, but they already had the money. They just used it for other purposes and repurposed it in a few different ways. That's what makes it inflationary. This is what leads to investors or people being pessimistic on the banking system. Another thing that makes it inflationary is the fact that they have the ability, essentially, with fractional reserve banking, it gives the banks the ability to lend out each $1 that you have deposited. They have the ability to lend it up 10 times, up to 10 times, right? So they only need 90% of the current deposits to be in that physical location. The other 90%, the other 10% is there in deposits. That 90% is out working, it's out being lent out, it's out creating debt and creating more inflation. So the inflation comes from, let's say you have the central bank, the Federal Reserve Bank, which is where the money supply comes from. They will essentially take $100. This is the real money. They take $100, and then they lend the banks $1,000 based off of that 100. They've multiplied it by 10. The banks then take that same $1,000 and they lend it to businesses, they lend it to people, they lend it to consumers, and then they lend that money 10 times. So now that $1,000 that the Federal Reserve lent to the banks has now turned into $10,000, and this all came from $100. So now you have $9,900 of fake money, of newly created money, of inflationary money, because this money is brand new and it's going to devalue the dollar. Now you have $9,900 of money that came out of thin air. Okay, this is what drives the value of the dollar down, and this is what creates inflation. This drives the prices of goods and services up. This is what creates booms and busts in the economy. All right, so if you didn't know this, I encourage you to join my education center on Facebook called Stock Market Education Center. Follow me on Facebook and other platforms, and I will be sure to help you and have your back in every way to understand these financial concepts that essentially lead you to the need to invest your dollar, circulate your dollar to make sure that you're not losing value because the government essentially controls monetary policy. All right, investing family, peace.